Welcome to the deep dive. Today we're tackling a topic that definitely falls into that category of maybe a little intimidating, but it's crucial if you're thinking about it. Starting your own business, step by step.
That's right. We're really going to peel back the layers here. Not just the big ideas, but the actual, nuts and bolts. The process of making a business legally real.
And our source for this deep dive, it's super practical. We're using a guide from a CPA who's also a business owner.
Yeah, someone who's been there, done that,
Yeah.
and they've laid out the steps they wish they'd known right from the beginning.
They actually point out that getting this kind of advice one-on-one from a pro, that could easily cost you hundreds, maybe even over $1,000.
Right. So our mission today is basically to pull out all that actionable stuff for you straight from this guide.
What do you really need to know? What do you need to do when you're ready to launch?
Exactly. We're boiling down the key info from this source. Think of it like getting that expensive consultation, but, well, for free right here.
Okay, let's dive in. Step one. And this might actually be less stressful than people think, choosing your company name.
Totally. I mean, the name does two things, right? It's your legal name when you register, but it's also your brand, how you advertise.
But the advice from this guide is pretty clear.
Don't get stuck on it. Seriously. Don't let the perfect name search paralyze you.
Just pick the best name possible right now and, keep moving.
And here's why that works. Names aren't permanent fixtures. You can easily use a DBA, a doing business as name, later.
Or even legally change the official entity name.
Yeah, the source says it's usually pretty easy and cheap to do down the road. So the takeaway on names, pick something good, but don't overthink it early on. Move forward.
Okay, that takes some pressure off. Step two, then. This one, the source admits, can feel a bit more dense, choosing the business structure.
It definitely has more pieces to consider.
Yeah.
But let's break down the common options based just on what this guide says. First up, sole proprietorship.
That's basically just
Yeah.
you, right? You are the business.
Exactly. Legally, there's no separation, which means pros, usually less paperwork, maybe saves on filing fees initially.
But the cons sound pretty significant.
They can be. The big one mentioned is zero legal liability protection. So if the business owes money or gets sued, your personal assets, house, car, savings could be at risk.
Oof. Oh.
Plus, you might miss out on certain tax savings later, and some bigger clients might hesitate to work with an individual versus a formal company.
Got it. So, option two, the single member LLC, limited liability company.
Right, now you're creating a separate legal person for your business, even if it's just you owning it.
And the main advantage there is?
Liability protection, that's the key. It builds a wall between your personal finances and the business's debts or legal issues.
So it's separate. It gets its own ID number, too.
Yep, an EIN, like a social security number for the business.
Yep.
The guide notes, though, that an LLC usually doesn't give you the absolute best tax treatment right away, especially compared to others if you start making good money quickly.
Okay. Which leads us nicely to the S corporation, or S corp.
Now, the guide points to the S corp as the structure with potentially the most tax savings on your profits.
Okay, that sounds good. What's the catch?
The catch, and it's a big one, according to the source, is the administrative burden. It gets way more complicated.
How so? What does that look like day to day?
Well, you essentially become an employee of your own company for tax purposes. That means running formal payroll.
Like with holdings and everything?
Exactly. Social Security, Medicare, state taxes, federal taxes, all withheld from your paycheck. Plus, you have to file a totally separate business tax return, Form 1120-S.
Wow, okay. That sounds like a lot more work. Or money, if you hire someone.
It is. More time, potentially needing software, maybe an accountant. It adds overhead.
So it's a trade-off. Potential tax savings versus definite extra hassle.
Precisely. And the guide really stresses this. The S-Corp tax benefit only helps if you're actually profitable. If you're not making money, you're just doing all that extra admin work for nothing, tax-wise.
Right, makes sense. Okay, last main one. The C corporation, or C Corp.
Yeah, this is the structure most big public companies use, but the guide mentions it for small businesses for a very specific reason.
Okay, because usually you hear about double taxation being a downside.
Right, the guide mentions that too. C Corp profits can get taxed at the company level and then again when they're paid out to owners.
Huh?
Generally, higher taxes year to year compared to an S Corp or sole prop.
So why consider it then?
The main reason highlighted in this source is if your long-term plan, like way down the road, 5+ years, is to build the business and then sell it.
Ah, the big exit strategy.
Exactly, because of something called Section 1202 small business stock.
Section 1202, what's that?
It's a specific tax code provision mentioned in the guide.
Yeah.
If you meet all the rules, like holding the stock for over 5 years and your business is in a qualifying industry, you could potentially sell your stock and pay zero capital gains tax, like 100% tax-free on the sale.
Whoa, zero tax on potentially millions. That's huge. But there are catches, you said.
Yeah.
Industries.
Yeah, the guide explicitly called out that many professional services don't qualify. Think tax firms, accounting, law practices, medical practices. So if you're in one of those fields, this likely isn't an option. You absolutely have to check if your specific industry qualifies.
Okay, so the C Corp is a gamble, almost. Higher taxes now for a potential huge tax break later if you qualify and if you sell successfully.
That's the trade-off presented, yeah.
Right.
And quickly, the guide also mentions partnerships. That's just the term if you have co-owners. A multi-owner business could be set up as an LLC, an S Corp, C Corp, or a specific partnership structure, which often works like an LLC.
Got it. That's a lot of options. So how does the source help you choose? What are the actual recommendations?
Okay, here's the simplified breakdown from the guide. If it's really just a hobby or you're, not quite taking it super seriously yet.
Like a side hustle you're testing out?
Yeah, exactly. The advice is stick with sole proprietorship. Keep it simple. Avoid the paperwork, the filing fees, the separate tax returns for now.
But what if you are worried about liability, even with a small side thing? Say you're a freelance graphic designer and worry about getting sued over a logo.
Good question. The guide actually suggests looking into insurance before jumping to an LLC, just for liability.
Insurance instead of forming an entity.
Sometimes, yeah. Things like professional liability or general liability insurance. The source says it might be way cheaper than you expect, their advice. Call an insurance broker. They mention big names like State Farm, Geico, Allstate as examples, and get a quote. It's often a free consultation. Insurance can sometimes cover that risk without the hassle of forming an LLC right away.
Interesting. Okay, so sole prop, maybe plus insurance. For the casual start, what if you're serious from day one, you know this is going to be your main thing?
Then the recommendation is almost always start with an LLC.
Why the LLC?
You get that crucial legal liability protection immediately.
Mm-hmm.
Your personal assets are shielded, but initially you don't have to deal with a separate business tax return or the complexities of payroll like an S Corp.
So it's a good middle ground to start.
Exactly. It offers protection without the full administrative load right away. The main ongoing cost is usually just an annual state filing fee, maybe $50 to $200 depending on your state.
Okay, LLC for the serious start. When does the S Corp come into play then?
When the business is actually profitable, or if you have a really strong reason to believe it will be profitable very, very quickly.
Profitable from day one. Does that happen?
The guide acknowledges it sounds unlikely, but gives an example. Someone gets laid off, but their old company immediately hires them back as an independent contractor. They have guaranteed income right away.
Ah, okay. So in that case.
In that specific kind of case, the S Corp might make sense right from the start to maximize tax savings on that immediate profit.
Because otherwise you're just taking on the S Corp paperwork without the tax benefit yet.
Precisely. Don't create the administrative burden until the profits are there to make it worthwhile.
And the C Corp.
That's really only if that long-term build and sell strategy is your primary goal, and you've verified your industry qualifies for Section 1202, a very specific use case according to this source.
And crucially, you're not stuck with your first choice forever, right?
Absolutely not. The guide emphasizes this. You can start as a sole prop or LLC, get things going, and then once you're consistently profitable enough that the tax savings outweigh the hassle, you can elect to be taxed as an S Corp. It's flexible.
That's really good to know. Okay, so name picked, structure decided. Step 3, according to the guide, actually forming the entity with the state.
Right. This is where you make it official. You register with your state's Secretary of State office.
And how does that work? Is it complicated?
The guide says usually not anymore. Most states have moved this process online. You go to the Secretary of State's website, find the section for Form a Business Entity or something similar.
And you just fill out a form.
Pretty much. You'll need the company name you chose, the structure you decided on, LLC, C Corp, etc., and some basic personal info like your address. Then you pay the filing fee.
How long does approval take?
Can be surprisingly fast. The guide mentions sometimes even within a day, especially if you pay an expedite fee, but more typically expect maybe 3 days to maybe 2 weeks.
And then you get, like, A certificate?
You get your official formation documents, usually called Articles of Incorporation if you're a corporation, or Articles of Organization for an LLC. That's your proof. Your business is now legally recognized by the state.
Excellent. Official state recognition achieved. Step 4 sounds important. Getting an employer identification number, an EIN.
Yes, absolutely essential.
Yeah.
This is basically the business's tax ID number from the IRS. Think of it like a social security number, but for your company.
Who needs one? Not
No.
sole props, right?
Generally, sole props operating under their own name use their SSN. But if you form an LLC, S Corp, C Corp, or partnership, any separate legal entity, you need an EIN. Even for a single-member LLC, getting an EIN is highly recommended to keep things separate. You'll use it for bank accounts, contracts, taxes.
Okay. And the guide has some very strong advice on how to get this EIN.
Yes, they really hammer this home. Get it directly from the IRS website, irs.gov.
And the reason is?
It is 100% free tarifa. The application on the IRS site is simple, straightforward, and you usually get the number instantly online.
So why the strong warning?
Because the guide points out there are tons of third-party websites and services out there. They mention LegalZoom as an example that will charge you money, like $100, $200, sometimes more, just to fill out the same free IRS form for you.
Wow, they're just filling out the free form and charging for it.
Exactly. The source basically calls it a waste of money. Go straight to irs.gov, do it yourself in minutes, and save that cash. That's a really valuable nugget right there.
Ooh, definitely noted. Go direct to the IRS. It's free. Okay, step 5. Open a business bank account.
Yes, and the timing here is key according to the guide. Do this immediately after you have your state formation documents, like the Articles of Organization, and your brand new EIN from the IRS.
Why the urgency? Oh, why can't I just use my personal account for a little while?
Big mistake, according to the source. You absolutely must keep business and personal finances separate from day one. No mixing allowed.
Why is that separation so critical?
Several reasons. First, bookkeeping becomes a nightmare if everything's mixed. Second, tax filing gets incredibly complicated and prone to errors. Third, and maybe most importantly, if you formed an LLC or a corporation for liability protection, mixing funds can actually undermine that protection. It's called piercing the corporate veil. You risk losing the separation you created.
Okay. Message received. Keep it separate. So you take the state docs and the EIN to the bank.
Yep, that's usually what they need to open a business account. And the guide also recommends getting a business debit card or even a business credit card linked only to that account.
To make it easier to keep track of expenses.
Exactly. Pay all business expenses from the business account using the business card. Deposit all business income into the business account. Clean separation.
Makes sense. All right, step 6. Getting the right licenses, certifications, and insurance.
This part is really specific to what you do and where you are. Licenses and certifications needed can vary a lot based on your industry, your city, your county, your state.
So how do you figure out what you need?
The guide actually suggests starting simple. A good old-fashioned Google search. Something like business licenses required in your city, state for your type of business. That's usually a good starting point to see what applies. This step is really a flag to remind you to do your specific research.
Right, it's homework time based on your situation. What about insurance?
We touched on this earlier for sole props, but it applies broadly. The guide mentions common types like professional liability that's important for service businesses, protect against claims of errors or negligence, and general liability that covers more basic risks, like if a customer slips and falls at your office, or property damage.
And how do you get the right insurance?
Talk to an insurance agent. The guide again mentions contacting reputable companies, getting quotes. An agent can review your business operations and recommend the right types and amounts of coverage, often a free consultation.
And they might know about requirements you didn't think of.
Exactly. Like maybe your office lease requires you to have a certain amount of general liability insurance. An agent can help identify those needs. And again, the source suggests insurance might be more affordable than many people assume. It's worth checking out.
Good advice. Okay, step 7. Keeping track of company sales and expenses. Bookkeeping.
Yeah, staying organized financially. This is crucial. And the guide has a very strong opinion on how not to do this.
Let me guess, not in a spiral notebook.
Exactly. Ditch the pen and paper ledger. The source calls it sloppy, disorganized, and basically guarantees problems later, especially come tax time. You need a system.
So what are the recommended systems?
2 main options discussed. First, for very simple businesses with few transactions, a spreadsheet can work, like Excel or Google Sheets.
How simple are we talking?
Like really few transactions. If you can easily manage it, fine. The guide suggests simple columns, date, category like sales, supplies, rent, travel, amount, and maybe a short note for details.
So maybe, okay, if you have like 10 transactions a month,
Maybe. The benefit is it saves time learning software and saves money on subscription fees if your volume is genuinely low.
but if you have more activity.
Then the recommendation is dedicated bookkeeping software. They mention examples like QuickBooks or FreshBooks. These are designed to handle hundreds or thousands of transactions efficiently.
What are the downsides of software?
There's a learning curve, for sure. You have to invest time to figure out how to use it properly, and there's usually a monthly subscription cost.
So the choice depends on your transaction volume.
Pretty much. The guide suggests you can even start with a spreadsheet if you're small, and then migrate to software later as your business grows and the spreadsheet becomes unwieldy. Choose the tool that fits your current scale.
And tied into bookkeeping, there was a tax reminder.
A very important one. If your business is making a profit, especially a significant profit, you need to be setting aside money for taxes throughout the year.
Don't wait until April 15th and get a shock.
Exactly. Good bookkeeping shows you your profit. Based on that, you might need to make quarterly estimated tax payments to the IRS and your state to avoid underpayment penalties. Planning is key.
Essential planning. Okay, that brings us to the final step in this guide, step 8, filing your business tax return.
Right, the culmination of all that record keeping. And how you file depends entirely on that business structure you chose way back in step 2.
Okay, how does it break down?
If you're a sole proprietorship or a single-member LLC that hasn't elected different tax treatment, it's simpler. Your business income and expenses get reported on a separate schedule, usually Schedule C, that's filed with your personal Form 1040 tax return.
So it's part of your personal return.
Correct. But if you set up as a C corporation, an S corporation, or a partnership,
And it's different.
yes, those are considered separate tax-paying entities, or pass-through entities requiring their own return. They must file a completely separate business tax return in addition to your personal return, like Form 1120 for C Corp, 1120S for S Corp, 1065 for partnerships.
Okay, so a whole separate return for those structures. How do you actually prepare and file it?
2 main paths suggested by the source. Do it yourself, using business tax software. They mention Intuit TurboTax having programs specifically for C Corp, S Corp partnerships that cost, a few $100s.
Wow.
Or you hire a professional, like a CPA or an accountant, to prepare and file the return for you.
And the guide weighs the pros and cons of DIY versus hiring a pro.
Yeah, it lays out the trade-offs pretty clearly. DIY obviously saves you the accountant's fee.
Big but.
Big but. The risk is you might mess it up if you don't really know what you're doing. The source uses the phrase, butcher the return. You could miss deductions, make errors that trigger penalties or audits, just generally cost yourself more in the long run than the accountant's fee would have been.
So hiring a pro costs more upfront, but might save you money and headaches later.
That's the idea. More expensive, but you get expertise, hopefully maximize your deductions correctly, ensure compliance, and gain peace of mind.
Does the source suggest a way to decide?
They float the idea of maybe working with an accountant for the first year or two,
Yeah.
let them set things up right, maybe teach you a bit. Then, if your business situation is pretty stable and straightforward and you feel comfortable, you might consider switching to DIY software later to save on fees.
Kind of like training wheels.
Sort of, yeah. And the final really crucial piece of advice here, if you do decide to hire an accountant, vet them. Don't just pick a name out of a hat or go with the cheapest option. Do a quick Google search. Check reviews on sites like Yelp or Google Reviews. Make sure they're legitimate, licensed, and have a decent reputation. They're handling your sensitive financial data. You want someone competent and trustworthy.
That sounds like incredibly practical advice. So that's the 8-step roadmap from this guide.
Yep. From choosing a name all the way to filing that first tax return. The source presents it as a totally manageable process, especially highlighting how you can save money by doing things like the EIN application yourself.
And thinking back to the start, getting this kind of play-by-play from a CPA could genuinely cost a fair bit of money.
Easily. So hopefully this deep dive has pulled out those key actionable steps and the reasoning behind them straight from that professional source, making it accessible for you.
These really feel like the core building blocks, the essential first moves you need to make to get a business legally up and running based on this practical advice.
Absolutely. It's the foundation.
Of course, following these steps just gets the business launched. It's really just the beginning, isn't it? The whole journey of actually running it, understanding the finances deeply, managing taxes year after year, knowing when you need more help, that's an ongoing process.
Well, definitely a continuous learning curve. So Thinking beyond just these initial setup steps,
Hmm.
what part of actually operating the business day to day, maybe managing cash flow, marketing effectively, dealing with customers, figuring out how to grow, what aspect do you think might be the biggest learning challenge for you personally down the line?